My name is Bill Stude, and I'm with a registered investment advisory firm called Zemenick Walker in St. Louis, Missouri.
Awesome. So I guess you have been to Berkshire Hathaway Shareholders Meeting multiple times.
Yes.
What is the top questions that you wish Warren Buffett answer?
I think my favorite part of the meeting every year is the Q&A, and you get a diverse group of shareholders from all over the world that ask more questions than you can believe.
Yeah.
And I can't think of a time that I've left the meeting and not had questions that I would have asked that are already asked by other shareholders. So I'm just here to kind of take it all in and listen. I don't know that there's anything really pressing. I know there's a lot of topics that people want to talk about, including the debt ceiling, what's going to happen on June 1st if that isn't addressed. Obviously, the recent issues with the banking system and whether or not we'll see more bank failures down the road. Mm-hmm. And then just general kind of conversations of as far as the markets, where the opportunities are today, and the general state of affairs.
In the past few months, it's kind of crazy for all the bank stocks. We have seen the collapse for Silicon Valley Bank. And also, we observed that Berkshire Hathaway actually start to dump all the banking shares from 2 to 3 years ago, and now it's basically like half of the value.
Right, absolutely.
Yeah, so do you think he maybe sense something, he see any red flags before everything happened?
Warren and Charlie always seem to be about 2 or 3 steps ahead of the rest of the world. Mm-hmm. And so looking back, it does seem like they must have identified some risks, and it could be, just the level of interest rates. And when interest rates are this low, they can only head in one direction unless they were going to go negative, which they didn't do. So, maybe they just saw the upside was limited and the downside seemed kind of scary. So they exited most of their bank positions. I know they still hold Bank of America.
Yeah.
So.
For sure.
Yeah.
I wonder what's your view about how to prevent similar things happening again, how to protect our banking system not to really fail into our the entire U.S. economy.
If you study the history of banks and the decisions that are made, unfortunately, it seems like bankers have short memories, and the mistakes that they make continue to be repeated. This current bank crisis is different than what we saw in 2008 and 2009, when it was really the quality of the loan portfolio. This time it's extended duration in their bond portfolio that has created the problem. I think that's just one of the issues with fractional reserve banking. As time goes on, we'll probably see more regulation in the banking industry, but the regulation that was done, the regulators were watching all of these banks, First Republic and Silicon Valley and PacWest, and it still didn't seem to make any difference. So I don't know that regulation is the answer necessarily.
Yeah, for sure. I think everyone was talking about how AI is shaking the whole industry. Definitely heard a lot of topics that covered during the event. Warren Buffett has comments, from everything he's seen, he think AI is pretty amazing, but he's not sure how much that AI can do. I'm not sure how you feel about this. As far as you've seen, do you see any signals that is shaking the financial industry from AI and ChatGPT style kind of app?
I think it's going to be a huge issue. I don't have a crystal ball to be able to tell you how it's going to play out, but I think 3 to 5 years from now, the world is going to look a lot different as far as how we use computers and AI, which I think people just woke up a few months ago to see what the power of ChatGPT is. And I think we're just starting to scratch the surface of what's going to happen down the road. So many industries, I think, are going to be turned on their heads. Lots of work that is currently done by humans will be done by computers.
Alex, he mentioned this is going to be a huge opportunity for Alphabet stock.
It is a huge opportunity. Unfortunately, it does require sort of a crystal ball to see who's going to be able to capitalize on that opportunity. And yeah. I think, given what Alphabet / Google, they've invested tens of billions of dollars into research, and it may bear fruit. I don't know, but I think they would certainly be one of the front runners as far as someone that would be able to take advantage of AI.
Sure. Okay, so let's take a step back from the expectations from the Fed at the end of the March. They're seeing a mild recession happening at the later of this year. Also, the unemployment rate is gonna incredibly increase before it reaches to 2% target. I'm not sure your investment style changed based on the expectation of inflation at all.
Inflation expectations are something it's an issue that needs to be addressed. For a long time there was no real expectation of inflation, and then we've seen it really pick up speed. Whether that continues, I don't know. I know that if you look at the TIPS market, the Treasury Inflation Protected Security market, and you tease out what the expectation is for inflation, it still doesn't seem like the markets believe that it's going to be a problem. I think there's a question as to whether or not CPI as a measure of inflation is a very good barometer.
Yeah, for sure.
If the Fed continues to raise rates like they have been, that's going to put a hamper on the economy and potentially slow things down, including inflation.
What kind of key factors that you've seen or you're considering this year when you considering to have a potential investment, or when you're looking at the company?
We try and focus on the long term, and the first decision we make is when will we need access to these funds? And if the horizon is less than 3 years, then we wouldn't commit that money to the stock market. There's just too much risk and volatility in equity securities in order to depend on those cash flows. So fixed income today is a lot more attractive than it's been in quite some time. Treasury bills are yielding about 5.2% if you buy a 90-day T-bill, and that is a lot better deal than we've seen in quite some time. Now, investors had to deal with a lot of pain in order to get to where we are, and the broader bond market had a 5-year period of negative returns, and so I don't think people are wildly enthusiastic about bonds yet, but I do think from a risk perspective they're as attractive as they've been in a long time.
Does that means we're going to be extra cautious of any inflation-sensitive market or stocks, since the market has a lot of volatility?
Yeah, the market does have a lot of volatility. The inflation, I think, is a real issue. If you look at the history of the purchasing power of fiat currencies in general, and recently the dollar, it's hard to argue that the dollar is a very good store of value. Mm-hmm. And so I think that's an issue that investors are going to be dealing with for the next 5 and 10 years.
Mm-hmm. And also, will the expectation of the inflation change any of your decisions or judgments of this year in short term?
That's a good question. I think on the margin, I think we probably would be more likely to invest in something that is going to have an edge against future inflation. I don't know that we're going to make a market call, but I think that most of our clients, or many of our clients, are retired, living off of their portfolios, and the ravages of inflation can really do some damage over a 3 and 5 year period. So that'll be something that will be a topic of conversation.
So what kind of advice you will give to other investors in the next 6 months or 1 year in terms of the investing, any risks or opportunities that you have seen?
Sure. So I think the risks of the financial system continues to see the strain that we've witnessed in the last couple of months. So I would be cautious as far as making concentrated commitments to banks. They have come down a lot from where they've been, but the bottom may not be in yet. So I'd be cautious on that front. And then as far as opportunities, value strategies have had a long period of underperformance. And I think that the argument that there are some real opportunities today, I think is a strong argument. We just listened to Alex and Bobby, and I think it's compelling. I think the fundamentals of the businesses are solid, and I think they seem to be pretty optimistic, and I think I am as well.